Another day, another hedge fund manager telling you to raise cash, that we're at the top of the market bubble and it is a time to be prepared for a guaranteed recession. Now, this individual, Ed Dodd, interviewed on the Julia LaRoche show, which I'm pretty sure she's a CNBC analyst like Sarah Eisen, which it seems like CNBC is starting to really promote the whole podcast scene, but they don't really brand it CNBC. Kind of interesting how they do this. I'd love to find out details on that. But anyway, what's going on here is you've got somebody tossing some bear poop, and I think we should listen to it to see if he has a point. So I've gone ahead and cut the most critical components, in my opinion, and we'll react to it. Let's listen in. First, we'll start where he talks about how we're in the stock market mania right now. Let's get into it.
Yeah, it's being driven by 7 stocks that are 40% of the S&P market cap right now. It's the AI stocks, and we are at a feeding frenzy of AI circular. They call it the circle jerk of financing. There's no money to fund all this. This is the problem. They want trillions of dollars, but their revenues aren't there. The ROI is not there, and the markets are starting to figure this out. And that's why they're doing all these circular deals to keep their I guess, the momentum of hype going. And then yesterday, or the day before, Sam Altman and Jensen at the same time said 2 things. They wanted, Jensen said China's going to win, and Altman said we need a government backstop, basically. And then he denied it. Then it came out that 2 weeks ago in a memo, they asked for a government backstop.
Okay, both of these people, just to add clarity here, denied their original comments. So you had Jensen, who walked back the China is going to win comments after it sounded like the Trump administration got pissed. Mind you, we have NVIDIA earnings this week, so it should be quite entertaining. Those, along with jobs data for September and the new ADP weekly report. We'll get the ADP weekly report today, and then, tomorrow, and then, of course, later this week, we'll go ahead and get the other data. But Jensen walked this back after, I believe, the Trump administration was pretty disappointed in Jensen. And then Jensen said, don't worry, the United States, we are still substantially ahead. But he was really planting the seed for, dude, stop. Like, we need to go all in here on supporting the chip industry, which was interesting. I think part of it is because Jensen really wants chip sales to China. The problem is you just had companies like Amazon blocking or supporting the blocking of NVIDIA chip sales to China, mostly because there was also reporting that Alibaba is potentially utilizing artificial intelligence to help the Chinese military, potentially against the United States. And, that'll piss the United States and White House off. But yeah, take a look at this. Amazon and Microsoft back effort to curb NVIDIA exports to China. So this tension has been very real, and this is one of the reasons why Jensen's like, hey, if we sell China our chips, then they're relying on us. Come on, let us sell chips. Jensen wants the revenue. He's about to tell us that they're expecting $500 billion of revenue in this next earnings call. It should be a phenomenal earnings call. Of course, how the market reacts is a totally different story. And then, of course, yes, Sam Altman essentially did ask for a government backstop, then came out and denied it. The CFO asked during an interview. Then they denied it. Sam Altman walked back her comments. Said, no. We're just saying, like, hey, things would go faster if the whole industry was supported. And then, of course, a White House memo comes out which says, no, yeah, we basically have been exactly asking for a government backstop because it would make financing cheaper, which making financing cheaper is exactly what people are worried about today, because you even had Jeffrey Gundlach just this morning come out and say, raise 20% cash because the private credit bubble is a ticking time bomb. And there's a reason credit default swaps are going up, because credit risk is starting to be realized as being very, very dangerous. Well, here we are. Now you've got NVIDIA asking for help from the government and OpenAI. And in other words, Ed here is saying that's a bad sign. Well, we'll see.
They want government guarantees. So that signals to the market a couple things. What does that signal? That signals that the financing of this this bubble is coming to an end. We're starting to see it in CDS spreads, credit default swaps. CoreWeave is exploding up. Oracle's exploding up. And so the financing is getting tight because the credit markets are starting to tighten.
Keep in mind, some of that increase in CDSs, those spreads, could be hedging. And it's that's what CDSs are, right? It's taking out an insurance policy. So some people are like, a lot of people are still very long these names. Maybe it's just hedging. Who knows? Or it's the start of something.
In general, because there's economic woes, we saw some subprime auto companies go bust. So the credit markets are tightening. And so the financing...
That was Tricolor First Brands.
...for this whole I guess, momentum AI hype is coming to an end. And Jensen and Altman told you that because they want a government bailout at all-time highs on NVIDIA stock.
I wouldn't go as far as calling it a bailout, but I do think that Jensen wants a government license to go sell more to kind of keep the cycle going. And I do think that Sam Altman absolutely believes that if the government backstopped the underlying chip values, then you could finance into infinity. But now you completely remove the market weighing any kind of risk, and you actually create guaranteed excess. We probably already have excess. We probably already way too euphoric, but that just guarantees it because you basically license excess. It's always the rich that get bailed out by the government, isn't it?
So this is a signal that demand is rolling over and financing is getting difficult. So the end days are near. I suspect the Trump administration...
The end days are here, my gosh.
...will, take equity stakes or do something. Today it came out, they're trying to figure out... They denied it yesterday. David Sachs denied it. But then today we're seeing Pulte talking about using Fannie and Freddie to take stakes in these companies. This is madness. They're buying at the top. And once they do this, I suspect those stocks will have one more pump and then it's over. So
Hey, that sounds bullish. One more pump. The euphoric end to the Nike swoosh. I don't know. Some would say we already hit the euphoric end.
We're just waiting for the S&P 500 and the rest of the global indices to roll over. They all have similar characteristics. They're very narrow markets. And the stock market is kind of hiding what's going on the street. And what's going on in the street is a disaster. And this is, we tried to tell the Trump administration they should have a sit down with the American people and say, look, there's going to be a hangover from our policies to get us to the golden age. They're now declaring the golden age is here. That's wrong. Affordability is not. Inflation is coming down, but it's not coming down as fast.
Keep in mind, this guy voted for Trump. And what he's really asking is for Donald Trump to sit down to the American people and go, look, we've got a hangover here from all this crazy illegal immigration that happened. We're going to slow this down. We're going to have some tariffs to try to reindustrialize America. It's going to put us through a recession. But it's fixing what we needed to do. He makes this argument. I'm summarizing that part so we don't have to spend an hour through it all. And you could watch it, obviously, yourself. But it's an interesting argument that he makes. He's like, hey, the president should be honest with us. What I think he forgets is the psychology of that. The president comes out and says that. You'll immediately cause a dash for cash, and you'll literally induce the very recession that ideally you would try to avoid. You would remove any chance of avoiding a recession if you did this.
As people would like. There's still healthcare costs rising because of the COVID debacle. So we are at the precipice of this becoming apparent to the masses. But, if you look at what the institution...
AKA stock market down is what he means when he says apparent to the masses.
Are doing. They're starting to slowly reallocate to treasuries, which is the safety trade. And we're in the distribution phase of the stock market, meaning the insiders are selling to the retail investors. And if you look at insider sales, they're at unprecedented records. So we're close. I believe when we look back on this, we will see that we're already in a technical recession right now. The third quarter numbers are coming out. People are talking about 4%, but that's mostly AI databases.
Probably because a lot of that data that goes into the GDP calculation was held up. So we didn't actually get all of the data, right?
About half of the GDP is that. That's all we got going on right now is database building. Every other part of the economy is rolling over, and people are feeling it. And, look, I call balls and strikes. I voted for Trump. But, they came out yesterday and they basically gaslit everyone, said the economy's great, jobs are coming back, and affordability is fabulous.
Yeah, it's unfortunate nature of a politician. You kind of have to fake it till you make it.
And that's just gaslighting. The economy's not great. We're hurtling towards a recession. And if you look at Bitcoin is usually an early harbinger. Bitcoin is now, year to date, underperformed U.S. Treasuries or performed slightly worse than U.S. Treasuries.
What he means here is that Bitcoin is a leading indicator of what risk assets are doing. And it's not just Bitcoin. I mean, really, if you look at the alt market, alt season, I mean, people have been waiting for alt season for a very long time. And the alts are just absolutely getting reamed. I mean, not just on the 7-day, but if you go out for just the last 6 months on some of the alts, the vast majority of these are red. I mean, if you look at various different ones, some of them are going to have a little bit of green in life, but boy, a lot of the alts, I mean, this is a sea of red here, and this is on the 7-day. And this is true when we go out towards some of the 30 days or even the 6-month numbers as well. And it has frustrated a lot of people in the cryptocurrency market because the thought has been, hey, the stock market is at record all-time highs. Why are we not seeing more movement in the alts? Here now all the way on the far right, I added the 30-day column. And you could just see, you've got some here, Monero and what do we got over here? Uniswap up 30% on the 30 days. But it's mixed into mostly a sea of red over here. Pretty wild. And so this could be an early indicator of a risk asset saying, you know what, we've got too much exposure to debt. It's time to diversify from some of this debt, which I'm a big advocate of. A big advocate of saying, hey, you don't want debt right now. I worry that one day you're going to wake up and your stocks are going to be down 20 or 30%. And as soon as the market opens, you get an instant margin call. Terrible time to be in margin, my take.
So Bitcoin is probably going a lot lower. That's an early warning indicator of liquidity drying up. Nothing against the Bitcoin people, but it's not a store of value. It's a speculative instrument that's 95% correlated to the NASDAQ, period. And inflation is coming down, and we'll get a deflationary scare soon enough once housing.
Interesting to say that Bitcoin is 95% correlated, he said, to the NASDAQ. That would be to tech stocks. Somewhat true. You tend to see that relationship. I don't know that Bitcoin leads as much as it follows. It used to. Back in 2021, it was a really good tool for that. But lately, it's certainly been leading. It just hasn't done that a lot this year, so it is quite interesting. There's been a little bit of a divergence. But anyway, as far as things are going a lot lower, he's not the biggest fan of, pumping it up right now, is he?
Housing collapses because housing is 36% of the CPI, and that's coming.
Ah, right. Okay. And then he makes the argument that because illegal immigration has slowed down so much in areas that were big beneficiary areas of not just overbuilding, but also surges of immigration, you could see rents come down, and that ends up driving inflation down substantially more. We know that owner's equivalent rent, yes, housing, like you mentioned, 36% of CPI. It's only about 25% of PCE, but he is right. If we do continue to get flatlining rents like we're seeing on apartment buildings right now, especially, or even falling rents in some parts of the Southeast, you're going to keep pushing inflation down. There's this study that was circulating from the Federal Reserve that, tariffs don't cause inflation over the long run. They just lower GDP. Right. But this is what people have been saying, that tariffs would lead to a one-time increase in inflation because the tariffs were applied over a larger period of time, over, let's say, 6 months. We might see that bump over 6 months, year over year. But after that, you sort of build in the prices, and then you don't have actually long-term inflation. What you have is a long-term compression of the economy, which actually then, when you compress the economy, what a surprise, leads to disinflation, potentially even, as he just mentioned, a deflationary scare if you go through a recessionary period. That's when you get the Federal Reserve to print. The question is, will the Federal Reserve print early enough, or will they follow history, absent what they did during COVID, and actually be too late to print?
So they're going to be behind the 8 ball. And I suspect,
there's your answer. The Fed will be behind the 8 ball.
When things really get going and we see the credit markets blow out, there's some bank issues, bank stocks start collapsing, and the general indices start going down quite a bit, we'll see the Fed panic and cut 50 to 100.
That, by the way, would be a form of a shock, which we are shock primed for that now with where we sit with yield spreads.
I don't know when that's going to, it could happen. It could happen before the end of the year or sometime in the beginning of the year, but the Fed will panic at some point because they're so behind the curve. And it takes,
Julia's like speechless here.
It takes 18 months for interest rate cuts to actually affect the real economy. So these cuts, won't save the stock market. They won't save risk assets.
That is a big belief right now, is that, if the Fed just starts cutting, we'll be rescued. Everything will be fine. They're not going to cut enough until it's too late, and the amount of pain
eventually
that happens there.
There'll be a risk asset rally, but not anytime soon. What happened and why? If he doesn't do it soon, it doesn't matter what I say or you say, and we can say it's Biden's fault. The American people won't. The opportunity to communicate this and lay blame where it is passing quickly because you're gaslighting. It's not a good move.
What are you?
This, by the way, I cut that in from the interview. This was him where he makes the argument that Donald Trump should take the opportunity now to basically say, look, we're going to go through a recession and blame Biden for that now rather than gaslighting and say everything is fine. That's where that is.
I said in January, February, there needs to be fireside chats. We're going to cut government spending. The illegal immigration juiced the economy for 2 years. I'm stopping it. We're going to have a recession, and I'm going to do trade deals, and I'm going to bring manufacturing back. So we're going to have some.
Again, if you did that, you would literally just engineer a recession. We know he's not the biggest fan of what happened with immigration. We got that loud and clear. But there is a little bit of a problem here with messaging potentially creating reality. As much as we would like that teacher or that doctor that says, listen, this is going to be hell, but we're going to get through it. There's a reason why politicians usually prefer to gaslight us.
And people are scrambling for dollars right now because things are getting tight. And the dollars are valuable because they're the best.
Remember the fund manager survey at Bank of America? It says hedge funds have, or fund managers have the lowest available cash right now that we've seen in quite a long time, and it has triggered the Bank of America sell indicator. So when cash allocation falls under 4%, and even worse if it falls under 3.8%, they say time to start thinking about selling. And so cash is becoming scarce, not just amongst fund managers, but also amongst retail. I mean, really, the way we're seeing extra inflows in the market right now is just more debt. We saw with the Robinhood numbers that debt has increased on a month-over-month basis in the highest, most extreme manner that we've seen for the duration of the chart they gave us. So it's not great.
Collateral to shore up margin accounts and other things. So that's why the dollar liquidity issue is going on. And, I think one of the benefits of this recession that's coming is we'll be able to term out our short-term treasury bills into longer-term notes. So we're going to be able to do that. But
okay, basically, one of the benefits of the recession coming, first of all, that line is it's guaranteed happening. I mean, I'm on the 50-50 teeter-totter. This guy's like, nah, man, foregone conclusion, we are going into recession. He's like, we'll be able to do what Janet Yellen wanted to do, which is, lengthen our duration at lower interest rates for debt. But, it also gives us an opportunity to buy things cheaper, I suppose, eh?
It won't be because of economic growth. It'll be because of a recession. So our Treasury Secretary Besson.
That's the argument about inflation coming down and yields coming down. He's making the argument, no, yields are not going to come down because of growth, like Besson says, or Slutnik, or whatever his name is. But instead, it'll be because of a recession.
We'll have an opportunity to take. Yellen front-loaded our debt with the Treasury bill issuance. He'll be able to term it out at much lower rate.
Term it out is lengthening it. Janet Yellen talked about doing that, but never actually did it. That was his frustration here, just to clarify that, because Janet Yellen did talk about that.
I'm not suggesting you take out a HELOC. Do not do that in this environment. But
this is his suggestion. I love it, by the way. Don't take out debt.
The bottom line is, if you own your single family home and you only have one property, you shouldn't care about whether it goes up or down as long as you keep your job and you can pay your mortgage.
Basically, as long as you're not going to go bankrupt on your mortgage, Doesn't matter if there's any kind of fluctuation in real estate values. What about stocks, homie?
We're hurtling toward a recession, as you put it in the conversation.
I think we're already in one.
I was going to ask you, are we in a recession now?
We're in one. We'll find out, a year or two from now when they do the official stats.
Okay. From what you can share, how are you thinking about this environment and how you want to be allocated?
I've said, I was early like Warren Buffett, and I've said you want to be, and again, this is up to you personally, where you are in your life. If you're young, don't freak. If you have a 401k and you're 30, raise some cash so you can, buy at lower prices. If you're near retirement, raise more cash, and then once the storm, we're in the thick of the storm, you go back in. You just want to have flexibility and opportunities to take advantage of what's coming so you can sleep well at night.
Take advantage of what's coming and sleep well at night. I actually love this, and I'm not suggesting everybody rush for cash, but I have been a fan of raising cash. The alpha report we've been sending out, I've been sending alerts on here's what I'm selling, here's what I'm buying, and it's not just the tickers or my top 10 stocks to buy for the next 10 years, even if we go through a dipply doodla, but it's the ratio of selling to buying that I'm doing. So I kind of agree with his raise cash idea, and it is not just about trying to time the market, but it's also for that peace of mind, that psychology that, hey, if poop hits the fan, I'm already prepared. I've already put together a war chest to go shopping. You can get the alpha report over at meetkevin.com. But let's listen to him finish this out.
I never tell people what to do, but it's called dry powder. And I've done some consulting on the side with people, and a lot of people who call me are already well prepared. I guess it's more of a psychology handholding situation to make them feel good. So recessions are painful and bad, but there's also, on the bright spot, you come out the other side, asset prices are lower, millennials can participate and get buy homes, and that generates a lot of economic activity. And oh, by the way, if millennials and young people have a stake in the country through asset ownership, maybe they won't elect communist mayors in New York.
We'll leave it on that. Look at Julia's face there. Well, I guess you could tell their opinion on Mr. Mamdani in New York. But wow, okay, so he has a point. If asset prices come down, it gives you an opportunity, gives Gen Z and millennials an opportunity at the prime of their working career to over time build exposure to assets. I'm a big fan of that. I do worry that people are going to get hosed, and what will actually happen is the opposite, is that people who are now swiping up on stocks and swiping up on leverage end up getting so freaking hosed that they end up taking a decade off, and they're like, oh, hell no, I'm not touching stocks again in my life. And it takes them 10 years until we get to the next bull run for them to buy again, and they're buying at the top again. It's something to think, put a sticky note on your desk or something. If we have a recession, 50-50 chance in my opinion, if it happens, please spend the 10 years from the bottom up, slowly acquiring. Acquire ownership. That's all you want over the next decade. Work hard, put the blinders on, and acquire. What do they say? Be greedy when people are fearful. Bro, we're 4% off all-time highs, and if you look on Twitter, it seems like people are fearful on X. We're not even close to fear yet.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.